Good morning everyone and welcome to a new week here at Morning Markets. So last week ended with a strong finish for UK equities, but it capped a largely uneventful week for developed market equities in general. But we did have a number of data points from the UK and the US which were interesting. So recall that retail sales data in both the UK and the US were above expectations. Now this is important because it indicates that despite the building inflationary pressures in goods prices, the spending power of consumers remains, and this is perhaps as a result of the full employment which has been experienced in both the UK and the US economies. Now the jobs data in the UK was particularly interesting because both the headline data was very strong, and we now have unemployment at record lows, but also the underlying metrics within the data set was interesting as it indicates that the number of available jobs exceeds the number of available workers, and this points to continuing strength in the jobs market from businesses which are short of labour. However, as I said, despite this economic strength, it was a somewhat uneventful week for equity markets in general. Now the cross currents here which are affecting markets are driven by the particular concern that central banks may be forced to raise interest rates beyond the levels that we've become accustomed to over the last 10 years. And until the inflation picture, particularly in the US, becomes much clearer, market worries will continue to be dominated by the worries that financial conditions for both households and businesses will be much tighter than we've experienced over the last 10 years and may slow growth more than we have been used to. However, we have had some positive news this morning, which has got US equity futures off to a good start in Asian trading hours, and the UK and European markets have followed through with strong starts as well. The reason for this is some news from President Biden that he is going to ask his US Treasury Secretary to look again at the tariffs currently imposed on imports from China. Now recall this is a legacy of President Trump, but any reduction in tariffs would perhaps be good for US inflation in bringing the level of goods inflation down modestly, but perhaps also improve the geopolitical relationship between both China and the US. Now, if we look ahead, some important data points coming in the early part of the week are measures of business sentiment across Europe and the US. Now, this is important because it will give us a good indication of any improvement in supply side data for US businesses, particularly with regards to the supply of goods coming from China, but also on the demand side if we're seeing any slowing in the consumption of goods from consumers given the building inflationary pressures. Now this data all comes out both tomorrow and Wednesday, so colleagues there will look forward to updating you on those data prints as it comes out. That's all for today. Thank you very much.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.